Delano Saporu. He is founder and CEO of New Street Advisors. And welcome here on set, by the way, first time.
Thank you for having me.
It's good to see you. So let's start with Beyond Meat. Shares down about 6% into the print today, up about 20% this year. That's not bad. Street will be watching for demand on the. I didn't know they recently launched Beyond Pepperoni. They've got plans on further price hikes. General consumer elasticity is always a question mark. Debt levels are an overhang on shares, which are down more than 90% from their 2021 highs. And in fact, the company is worth less than $1 billion now versus its peak of $11 billion just a couple years ago. What would you do with this stock?
This is a stock that you want to hold right now. I think there's a few reasons why. If you look at the short-term story, it's not as strong. It's not great. They have a weaker consumer right now. They also have an area where they're looking at a situation with debt is, as you mentioned, an overhang for them as well. I'm looking at the long-term story for Beyond Meat. I think there is a long-term play in the food service side of their business. They can bet on and hang on the moat of the players that they partner with on the food side, rather than competing on the retail side, which is a very, very tough position. If you also look at this, I think shareholders could be diluted because they're burning cash, so they have to raise cash at some point, and that could be dilutive to their current shareholders. So I'd be holding and waiting for a lot of this to play out, Kelly.
No, it's impressive you're not a sell. I mean, we gave you 3 tough names today, so I have to. So this one's a hold. Then what about Chegg? Those shares were down nearly 40% on its last report, despite an earnings beat because they issued weaker than expected guidance and warned that ChatGPT will have a big impact on its new customer growth rate. They haven't really rebounded since that report either. They're down more than 80% from their 2021 highs. What do you do with this name?
This one we'd be cautious of. If you look at Chegg, you just mentioned actually the competition with something they probably didn't foresee, which is obviously ChatGPT. They, of course, went and partnered with OpenAI to create their own AI function for their platform. But I looked at something interesting in their report, which was that there's 1 million fewer higher ed students in school than there were over the past few years, and that trend is lowering. If you look at the growth story for the company, that's concerning to me if you're looking at the growth story, because they obviously needed with their platform to have those higher ed students, obviously, the subscription service. So I'm cautious on the stock. I think the growth story is a little bit shaky with those more competition and obviously less of their end users on the platform.
And they were rallying earlier today. They have this partnership they announced with Scaled AI to develop proprietary large language models, but I think, as you're saying, even with the competitive edge, this is just a tough market to crack right now.
Yeah, 100% tough market to crack. If you're looking at the way people are consuming education now, there's just a lot more competition from social media, from different platforms, obviously, from ChatGPT and OpenAI and other language models that will come out. So I think that's going to be a big sticking point for them. When they have to wade through that, if management does a good job, it might be an opportunity to take a better look at the company. But for right now, I would be cautious.
On the sidelines. All right, so what about Under Armour? Shares are down more than 22% this year, and this stock peaked in 2015 at about $50 a share. It's under $8 right now. International and footwear growth will be key, according to Raymond James, as the U.S. and apparel segments are still under pressure. That firm also saying they expect Under Armour to discount merchandise in order to clear its high inventory. That could hit margins. And the company just announced some executive changes at the end of June, including plans to shift the COO role to Chief Supply Chain Officer. But what a tough story this one's been.
Yeah, it's been a tough story, and this one I'm still hanging in on. If you look at Under Armour, as you mentioned, the last quarter was telling to what we could potentially see this quarter, which were margins were compressed and inventory up, and that's obviously not great. You don't want to see inventory up, and it's obviously telling of what's going on with consumers right now and how consumer demand is weakening. So when I look at Under Armour, the thing that I like about them is you mentioned the change in management. Kevin Plank did such a great job building this company up for over the last couple of decades, and now if we're looking at the new fresh eyes coming in and what the new CEO is really focused on is branding and positioning. I think that's where Under Armour could make a big change, right? If they're looking at who they're competing against, the competitors do a great job with the branding. And I think Under Armour could do a little bit there on that side as well.
But do you really think the stock's a buy, or is this just I won't let go? I can't let go.
This is one that I have not buyer's remorse yet. I still like it, and I still, really like the position I got in at. And I think, for one, if you're holding, you continue to hold on to that stock, and the people that, are still looking at it, it potentially could be a buy if you like the way the situation where the new CEO is taking things.
As I mentioned, we gave you a kind of couple of tough stocks, and that's just the mix that we have reporting today. Are there any that you really feel more excited about right now? Is it tech? Is it industrials? Is it healthcare? I mean, just kind of, where do you think the big opportunity is?
Yeah, I think think the big opportunity is going to be a long-term story for a lot of these companies. I think if you look at Beyond Meat, that's going to be a longer play and a longer hold for people. I think they're going to be near-term volatility, especially if you look at how extended the S&P has been over the last year to date potentially. So I think the long-term story, buyers are willing to stay in and stick in over the summer. There could be some happy buyers later on.
All right, Delano Saporu, thank you. We appreciate it. Good to see you as well today.